All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about two little stocks, two little ETFs actually, I should say, BITO and BITI. If you're new to this channel, a long time ago, we basically made a little review of the BITI and BITO strategy, kind of just going over if you were to, instead of buying only Bitcoin, if you were to buy these two ETFs, which one is short, BITI is short, and BITO is long on Bitcoin, could you potentially have the same kind of capital base but be receiving about 50% in terms of annual dividends? So in this video, what I want to do is I want to talk about how BITO and BITI has performed in terms of a capital base over the past year. And then as well, we're going to look at the dividends of both these ETFs to see, was it better to potentially use this strategy or was it better to just buy Bitcoin? And in the end, I'm going to show you guys kind of a strategy which I believe is best, which kind of strays away from BITO and BITI because it actually has not performed as we wanted. So that's what we're going to talk about in this video. I hope you guys do enjoy. If you do, we're currently up to 6,699 subscribers. So if you want to see this go to 6,700, all you got to do is click that subscribe button and you're going to be the first to see it. So we also have 447 subscribers in the past 28 days. That's awesome. Thank you very much to everyone who subscribed. And nonetheless, let's get into this video. Kind of before we get into BITI and BITO, what I do want to mention is I do believe that Bitcoin has actually played a pretty big marker in kind of the recent bull run that we've seen. Bitcoin currently down from its all-time highs. I'm looking at the Canadian dollar for Bitcoin, and I'm doing the Canadian dollar because it's a little bit more familiar with myself. Bitcoin reached about $155,000 Canadian, and you could see here it's trending from 155 down to 135 just within the past about 7 days or so. And as we've seen a drop in prices in Bitcoin, we've also seen a drop within the market. We've seen, I believe this is also correlated to the fact that we've seen major drops within big stocks like Coinbase, Tesla. We've also seen MSTR fall. Basically, a lot of stocks and a lot of underlying companies which are holding Bitcoin are falling, which I believe is in turn having the market fall. So that's just something to keep in mind. Stocks that are holding Bitcoin right now could potentially continue to fall if Bitcoin's price falls. But the real reason why we are kind of doing this video here is to compare this BITO and BITI strategy. Now, for those of you that aren't familiar, BITO goes long on Bitcoin. And we look over the past year, when we're comparing BITO, we're also going to compare this to Bitcoin because really BITO looks to track the share price of Bitcoin and pay out a dividend. Annualized, it's about 50% from what it's paid over the past year. So when we look at BITO, we've seen it's up about 6.3% over the past year, which seems extremely ridiculously low because Bitcoin is up about 129%. So in my opinion, BITO has done a very poor job in terms of tracking Bitcoin. Even with a 50% dividend, you add 48% to 6.3%. That's about 55%. That's half of the appreciation that we've seen in Bitcoin alone, even after it's down after $20,000 after this little kind of bear run here. And when we look at BITI, the reason why I say BITO performs so poorly is because BITI tracks the opposite of what Bitcoin does. It goes short on Bitcoin and it's down 61%. So basically, just based off this calculation alone, we have 6.3%. I'm busting out the calculator here. 6.3% plus the dividend paid out by BITO, which is 48.37%. I'm going to add all this up, plus 48.37. Boom. We're looking at 54.67% as a total return over the year for BITO. If you were to have invested and bought 50-50 BITO and BITI, which is what really the strategy entails, because you want to keep that capital base the same and you just collect those dividends, you're looking at a overall return, subtract 61, just to be exact here, 0.79. you're looking at a total return of negative 7.12%. Look, I understand, you know what, these are very rough calculations, but this is extremely poor for a strategy where the underlying has performed 129% over the past year. So BITO and BITI has been a very poor strategy if you were to have gone in 50-50 on each. In my opinion, a better strategy, which of course you can only kind of connect the dots looking forward, or sorry, looking backwards, not looking forwards. So about a year ago when the strategy was introduced, everyone thought, okay, if BITO can track very closely the price of Bitcoin, you're going to be okay holding BITI. But clearly that has not been the case. BITO has underperformed. You could say BITI has a dividend. It's 1.4%. I consider that negligible in my opinion. A better strategy, which is a strategy that could be used going forwards, would be to purchase Bitcoin, and if you want protection to the downside, you buy the exact same amount in BITI. Now, on the daily, it looks like BITO and BITI, they track themselves pretty well. And when we look even at the 5-day chart, we have BITO down about 16%, and BITI, let's see what we have here, about 13%. So they're fairly close. But the fact that BITO does not perform like Bitcoin is a huge problem to the strategy. And that's why, in my opinion, the strategy does not work. I understand that people buy BITO because it has a huge dividend, 50%, which is cool. But the fact that it significantly underperformed the underlying stock, to me, that almost says like this strategy doesn't work and I would stay away from buying BITO. Of course, I buy yield max ETFs. I have a ton of yield max ETFs. But if I don't believe that, for example, BABO, PYPY, or SQY is going to be remotely close to the underlying, then I'm likely not to buy it. I'll likely just invest in YMAX, or I would buy the underlying. Of course, you invest in BITO for the dividends, but when it's significantly underperforming like it has over the past year, it's just not something that I would kind of look further into. So this was just a short video, nothing crazy, just to go over BITO and BITI as a potential 50-50 strategy. It clearly did not work due to the fact that BITO significantly underperformed Bitcoin, where BITO was up about 56% year to date, where Bitcoin was up 129%. That's almost double. And at the same time, if you were to have bought 50-50, you'd be down about 61% over the past year, which with this strategy would have produced you a negative return as the underlying went up 129%. That is ridiculous. So this was just a video to show how the strategy did not work over the past year. Of course, I'll keep kind of a close eye. I'm watching Coney right now because as Bitcoin falls, Coinbase is also falling, and Coney has fallen very hard over the past even month or so. You could see down about 16%, 6 months, 32%. Same thing with Coinbase here over the past little while, the past month to 5 days, about 15%. So Bitcoin is definitely going to be something to keep track of, keep an eye on going forward, as it affects many stocks that we're potentially invested in, like Square as well for myself. So I'll do my best to keep you guys updated. We're currently up to 6,699 subscribers. You guys know what to do if you want to see that number change. I hope you guys did enjoy this video. It brought you guys some value, and I hope to see you guys in the next video.